You guys have made it back. It's officially been 15 days since I started this, and today we're gonna get straight into it. I appreciate you guys for being here, and I appreciate you guys for supporting me, and I really do. I really do appreciate that. So we're gonna go over what I took today. I took one very small loss, and I actually entered this trade, and then within like 2 minutes, I ended up exiting out of this trade because I feel like, or I knew that I probably shouldn't have been in this trade, and that's what I kind of want to go over is the fact that I took a trade and I set a limit order, which normally I've been placing. Oop, that's my notebook. Normally I place market orders, but I set a limit order, and then I didn't like the reaction that we're having. Ideally, I would like to see a better reaction off that level, and then we never got a reaction off that fair value gap. So one trade, very small loss. So basically, my framework around this trade is that I wanted to see us go from external range liquidity back down in internal range liquidity. This looks like a market maker buy model in my opinion, and at the end of the day, we know that now ES wants to go up and take these highs all the way up here, or we possibly do. We'll kind of go over that more in the chart review, but here we went from external range liquidity, and then I wanted to see us head back down to internal range liquidity. Notice as well that we have this 1 hour fair value gap here that I want to see us also reject off of. So I kind of had two things to go off of. I want to see us go from external range liquidity to internal range liquidity. That's what I really want to see. And as you guys can see, we kind of had like I changed my chart settings, by the way. I changed my chart settings. I like these a little bit better. They're kind of a little bit better to my eyes, but I don't know if you guys can see them as well. Let me know. But I will say I like these a little bit better, and I would much rather have chart settings that please me better than please you. Sorry, no offense. But basically, I want to see you go from ERL to IRL. That was my main framework. We had equal highs taken on ES. We also had SMT at the highs, but I'm not going to mark the SMT until we get displacement. So in my head, I'm like, yeah, this is a place in which we can reverse off of, and that we can go back in internal range liquidity, which is what was really my main basis around the trade. I want to see us go back to the 1 hour fair value gap, and NQ was actually in a daily fair value gap at the time. So I'm looking at this through the scope of being short. Like, if I'm going long, I'm not going to take a long within a daily fair value. I'm not going to take a long when NQ is within a daily fair value gap. I'm not going to do it. So therefore, I was pretty short biased. I may have been over biased, but I don't think that there was really a setup at all. So as we can see here, this is a trade that I ended up taking, and this reminds me a lot of a trade that I took last week. I'm actually going to pull up that trade just to show you guys, so it's not like me just saying it. It was this loss on ES that I took. It reminds me a lot of this. We had displacement lower, but this was just a sweep of this low and then just chopping around. Sweep of this low, then just chopping around. Yeah, looking at these chart colors, I like the new chart colors a lot better. This, it's all right, but the new chart colors I think are the move. So we had displacement lower. We're just taking this low, and then we're chopping around. Time is not aligned here. Time and price are not aligned. And that's kind of what I was thinking when I was in this. I'm like, hey, if we're going to sell off, we should sell off here. We take that internal low, and then we just end up chopping. And then for the rest of the day, we just ended up chopping. Why? Because the morning objective has been taken. So we end up chopping. We come into this fair value gap. I short it. Put 3 contracts, lower size, but I'm trying to catch this big of a move, and I was like, hey, we don't need to be in this. Why am I even in this trade? I don't need to be in this trade right now. I simply don't. I can always wait, and I can always get back into the trade. Okay, say the trade runs without me. Okay, nothing. I lose nothing, and that's kind of what I want to get a lot better at, and I feel like that's where the majority of my losses have come from. Like, most of the time, like, if I participate in a trade, my draw on liquidity will be good. I'll know where the market's likely to head. In this case, it wasn't the fact. But I know where the market's likely to head, but it's just my execution on that trade is just a little bit off. I'm trying to enter a little bit too early, and I feel like I could just take a deep breath and just wait for another entry, because even here, there's likely going to be another entry, and I think I just get too attached to the idea of that model playing out. And enter light size, 3 contract on MES, stop at the high, trying to target the original consolidation in the 1 hour fair value gap. We had a 5-minute change of state delivery. Fair value gap was targeting internal range, and we also had this nice original consolidation that I was also targeting. This now becomes your original consolidation of that market maker model, and this kind of is low resistance liquidity that I want to see us run, but obviously we never ended up doing that. So low resistance liquidity, original consolidation, that's what I was looking for. Where is it? Sorry. Took the trade off because I didn't get the reaction that I wanted to see. I put a limit order. I didn't feel comfortable, and it definitely was the right decision. As you can see, I would have got stopped out, which I don't like. If I ever have a negative emotion within a trade, just take it off. That's what I'm gonna start doing. Just take off the trade if I have any sort of negative emotion, within the trade. Ooh, sorry. I don't know why I'm trying to change this right now. Sorry, y'all. Okay. Time and price were not aligned. There can always be another entry. Say price ends up running. There's always going to be another entry. There's always going to be another entry. And what I say, I got a little greedy today, and I married my bias before it was proven. I married the bias of this being a market maker sell model before the market proved me that it was a market maker sell model. What to work on, don't always need the best entries. That is where I've really gone wrong, and that's like kind of the biggest hurdle that I've faced so far, is trying to get the best entries, the best entry. And I keep on saying this over and over, but I keep on making the same mistake over and over. The best entry is likely not always the right entry. And wait for the model to be valid before entering. And that's what I want to work on as well. Wait for the model to be valid. The model wasn't really proven to be valid yet. Like, there's always going to be there's always probably going to be another entry always within there. Play it slow. No entries within a day is not the end of the world. Say you don't even enter at all. Say I come into the market, and I'll say this again. Like, these slideshows might just me be like coming on here and talking to myself, and might make me sound like a maniac. It might make me like, you guys are probably like, why is he saying the same things over and over again? But I really want to burn it into my brain and really put it into my brain and contextualize it into my brain. I think I'm going to do that the best if I have repeated slideshows. If there's no entry within the model, I lose nothing. I lose nothing from coming on here and just placing 0 trades. I lose not a dime. I don't lose any conviction, and I don't lose a single thing if I just come on here and if I don't take a trade at all. Play it slow. No entries within a day is not the end of the world. 100%. The tortoise will win the race 1,000 times over, especially in the game of trading. And I will be that tortoise. If it takes me 3 years, if it takes me 4 years, it will take me 4 years. I don't care. I don't need this within 2 months. I don't need this within 1 month. I don't need this. I don't need this. So use NQ and ES together more instead of dialing on one. This is what I want to work on. Especially, like, sometimes I'll look at NQ and then I'll go over and then I'll look at ES and I'll go over and I'll look at NQ. I need to work them together. I need to work them, and I need to have them work off of each other because they are correlating assets, and that's what I want to get better off. Staying off the 1 minute 100%. I mean, it's cool to go in there and then look at your entry within the 1 minute, but the 1 minute will not solve all your problems. The 1 minute is sometimes can be destructive, especially for me when I'm kind of too zoomed in, because now I'm going to see every single retracement on that 1 minute, and I'm going to think like the market's shifting. But if I just key off those higher time frames and I have that higher time frame perspective, like, the 1 minute isn't going to shift where the market goes. It's not. Those higher time frames are. Today is just a blimp in my career. I'll always say this. Today is just a blimp in my career. Like, if we zoom out on my career, like, I shouldn't even be worried about today. Today is just a day to get better. Today's the day to when I can get better, and then I can look back on and say, hey, we got better today. We're getting better today. That's what we're doing. Was just watching your past broadcasts when I clicked and I saw your live. I appreciate it. Why is the 1 minute bad? Is it just psychological? I mean, the 1 minute isn't bad. It's just, I would say, especially as like newer traders, especially like myself, get enticed into that 1 minute, and then you think the 1 minute's gonna be end all be all, but then that 1 minute just ends up being like a 5 minute retracement. That ends up being, like, you think it's a one minute market structure shift, but it really isn't if you just zoom out to the higher time frames. And sometimes you get too zoomed in, too caught in on that 1 minute, and then that 1 minute ends up being like your whole bias. And that's why I think the 1 minute can be destructive. But if you know how to use the 1 minute, if you like, the 1 minute is just a time frame. Like, if you know how to use it, then you should be good. But I would say for me especially, I want to work on just staying off the 1 minute. I mean, like, yeah, I'm going to use the 1 minute still throughout the day just to see more data, just to see what the market's doing, to possibly get my entry there. But I don't need the 1 minute. I don't need the 1 minute. Do you use auto toggle scale on TradingView? I couldn't tell you. I don't think I do. Is it the A at the bottom? If yeah, I don't know. I don't. I think it's on actually. Maybe I do. Wait, where's my other chart right now? What is going on? Where's my other chart? Okay. All right. Yeah, I don't have anything else for the presentation. We'll be live for um chart review. Sorry, chart review. I think I'm gonna start naming something else. Market maker model review. I think that would be a little bit better because I really want to dial in and master market maker models. Anyways, I'll catch you guys later. I appreciate you guys for watching this and tuning in. And as always,